To remain updated with the latest business news, click on the bell icon.
You're watching Ask Udayan, the show where we answer your questions on stocks. I'm Abha Bakaya, and with me, our very own global business editor, Udayan Mukherjee. On Ask Udayan, we'll be discussing strategies to smartly invest in quality stocks. Do continue to send in your queries to the number on your screen. Let's kickstart with our first viewer query this week, coming in from Sumit Paul in Kolkata. Listen in.
I have 400 share of NMDC bought at 158. I'm a medium-term investor. So should I hold or I should exit from NMDC?
Well, you're sitting on losses right now, and that's never a good position to be in. But NMDC has been such a volatile stock. It was 100 rupees at the start of the year, then it shot up to 200, and now it's come down to about 130, 135 kind of levels. So you've bought somewhere in between. I think the reason why the stock has corrected is because global iron ore prices have also softened quite a bit over the last few weeks. And that inevitably, current quarter onwards, will start affecting NMDC's profits. Also, the kind of royalties that NMDC has to pay, that is steadily climbing. So between the two, the squeeze in iron ore prices and the higher royalties, I suspect that NMDC's profits will not grow significantly. And that's something which the market has been slowly building into the price of the stock. But having said that, there is a trigger in the NMDC company, which is that they are actually about to commence or commission a 3 million ton steel plant. And the talk is that they will demerger that steel business from the core iron ore business. Now, when that plant is commissioned and the demerger news comes in, you could get a possible fillip in the stock, and that might give you an exit opportunity. So now that you're sitting on losses, it might make sense to wait for that steel business commissioning to happen and then try and get out of the stock. But very long term, I don't think, given where we are in the metal cycle, it makes sense to hold on to NMDC beyond a point. There are much better stocks to bet on.
Let's take another query from Sanjeev Batra in Jalandhar. Go ahead, Sanjeev.
Hi Udayan, I have been holding 300 shares of BHEL at an average price of 100 for 3 years. Should I hold or sell it?
No, I don't think you're doing yourself any favors by holding on to that name, because I know there is a lot of excitement about a new capex cycle in India, and that's why people want to look at BHEL. But I think what they fail to understand often is that the capex which feeds BHEL's revenues actually comes very heavily from the thermal power segment. And thermal power, as you know, is a sort of a segment in decline, long-term decline, and therefore BHEL's revenues, which are still trading at, which are still quite a bit below the pre-COVID revenue line, I don't think will grow very significantly over a period of time. I mean, case in point, the recent cancellation of the NTPC power plant's order to BHEL tells you that the thermal business is in all kinds of problems. So there is a fundamental issue with BHEL's business model, and that is not made better by the fact that it has a very bloated workforce. I mean, how many companies do you know which have 30%? I mean, the workforce salary or costs is 30% of the revenue line. I mean, that's humongous. Now, to carry that and to make money out of revenues coming from the thermal business is going to be an uphill task. So you might get periodic rallies, etc. I don't know if the government will talk about divesting BHEL at some point. It's a wild card. But I think left to core business fundamentals, I think it will be very difficult for the stock to climb above your purchase price of 100 and make you any serious money in the long term.
Okay, our next query is from Viraj Kapoor in Delhi, and he's got a query on one of the stocks in the real estate segment. Go ahead.
Hi Udayan, what is your view on DLF? Can you please suggest?
Well, the real estate sector has had a turnaround, as you know, which is probably why you're asking about DLF. I think DLF is doing quite well compared to the last few years. I mean, it's Project Camellias in Gurgaon is getting rave reviews and very strong sales in that. I think prices in most cases are up about 20% from 1 year back. So both from a realization and volume point of view, DLF is doing quite well in the residential segment particularly. They've got some very aggressive new launches in NCR, in Gurgaon, in Gurugram, in Noida, in Chennai, in Panchkula. So I think the pipeline for the next couple of years looks quite exciting from a residential point of view. The only issue that you need to be a little careful about is that DLF has doubled. The stock has doubled in the last 1 year. Real estate is a high beta sector. If the stock market is going in for some kind of a corrective phase, you might see some of the froth coming off the real estate stocks, and DLF is no exceptions. So technically, I think the stocks might go in from into a corrective phase, but from a 2-year kind of a perspective, I think real estate as a sector from an investment point of view probably makes sense.
An interesting question from Sanjeev Kumar in Delhi, and he's got one on Vodafone Idea. Let's listen in.
Hi Udayan, I'm Sanjeev. I'm holding 50,000 shares of Vodafone Idea. What do you suggest? Thank you.
No, I'm not very optimistic about that name because it's frankly it's become a trading stock, and that's why a lot of traders are interested, because it trades in a very broad range of 8 to 12 rupees. 8 to 12 seems like 4 rupees, but it's a 50% range. So very few stocks give you such a wide trading range, and therefore traders try to scalp a few paise this way and that on the Vodafone Idea name. Sometimes they're successful, sometimes they're not. But to make a fundamental investment case for Vodafone Idea is very difficult, because the headwinds are very, very severe on that name. They need to raise capital quite desperately, frankly, because they've got a balance sheet to repair. I think the net debt to EBITDA is something like 33, 34 times, which is just unimaginable. And they need to spend money in wresting back some of the market share, which they're losing steadily every month. So on both fronts, capital is essential. I mean, it's like oxygen for them right now. But let's see if they're able to raise that in the next few weeks. If they do, you'll get a little bit of a fillip in the stock once again. But I think fundamentally, given that they have two such strong competitors and market leaders in Jio and Bharti Airtel, that it's very difficult to make an investment case, frankly. A trading case one can make from time to time, but a long-term investment case is very difficult.
Udayan, thanks so much for your time. That's all the questions you could take on today's edition of Ask Udayan, but do continue to send in your queries on the number on your screen. We'll take them again next Wednesday. Until then, goodbye.
If you like the video, do like, comment, share and subscribe.